Okay, well, welcome all to this latest event of SIOR Europe's Speaker Series. And we have members joining us from India, Italy, Germany, Poland, Ireland, of course, and the US of A. So we've got a good broad spectrum of members. It gives me great pleasure to introduce you to Philippe Cervesi, who is Head of Real Estate at Corum, the French-based real estate pan-European fund. After a business law degree and a commercial bachelor at ESCP Business School, Philippe started his career in private equity. In 2011, he moved to a value-add investment fund, Pegasus Partners, where he spent 3 years investing in France, mainly transforming offices into residential properties. Philippe joined Corum in 2014 as their investment manager in order to diversify investments in Europe. Since then, he has invested more than 3 billion in 16 European countries and Canada in all asset classes except for residential. He became head of real estate in 2021 with responsibility for managing investment, asset and fund management. Hi Philippe, you're most welcome and thanks for taking the time to address this SIOR Speaker Series. I first met Corum around, I think it was November 2013, and was involved in your first 2 acquisitions in Ireland at the time. I think you had about 6 staff then based in Paris, and it's grown quite considerably since then. So perhaps you could sort of talk a bit about the history of Corum and how it has grown over the last decade.
Sure. Hi, Paul. Hi, everyone. Thanks for adding me to this SIOR meeting. Yeah, well, when we met, indeed, were 6 people at Corum. The company was founded December 2011, so it was still the beginning of the story. It changed a lot. We are now close to 200, split it in 6 countries because we have now offices in London, in Dublin, Amsterdam, Lisbon, Vienna, and soon in Germany. So we grew a lot. We are now around 120 in Paris, and we have around 70 foreign colleagues split it over the other offices, and that are active in different markets. So we grew quite a lot. When we first met, I think Corum was around 200 million euros under management.
Yeah.
And we are in real estate, we're now close to the 3.5 billion. So yeah, that has grown also quite a lot.
Yeah, and how would you describe the ethos and the strategy for Corum to achieve its investment goals, and what sort of sets Corum apart from other funds?
I would say that we are what we can call a counter-cyclic investor. Basically, when we started and when we launched the funds at the beginning, one of the main priority was to have the biggest field possible. So we wanted to be able to purchase everywhere in Europe, everywhere in the Eurozone at least when we started. And we wanted to be counter-cyclic. So there are 2 ways to be counter-cyclic. The first one is geographic. So if you take the first years of the company, we were quite active, for example, in the south of Europe and also in Ireland, the countries that were still struggling after the crisis of subprimes, and also the asset classes. And you see that it changes a lot in real estate, and I'm sure we're going to talk about this, but at the time, retail was the star asset class. Everyone wanted retail and no one wanted logistics. So we were buying quite a lot of logistics and industry at the time because it was high yielding and well secured, and retail was quite challenging for us in terms of yield. And of course that changed a lot, and then we adapted. So the idea since the beginning has always been to adapt and move depending on the markets, be very agile, buy when a country or an asset class is cheap, and sell when it's quite hot with a lot of pressure of investors.
And how have you managed to achieve both the success of the funds and their investment objectives? And what sort of makes you, as I said, sets you apart from similar type investment funds?
I think it's a combination of 2 things. The first one was that we were quite open in terms of spirit, because not a lot of investors wanted to go in Spain or in Portugal in 2013, and basically at that time, or 14, we were buying the same stuff as we would have bought in Germany, but with 300 points of basis difference, but for the same assets with the same tenants. And at the end, the money comes from the tenants. So the first thing was that we were, some would have said that we were quite adventurous, even if the assets were not core, but let's say core plus, long-term lease, really good tenant, financially speaking, but in locations that were not France or Germany at the time. And the second thing is the independence of the company. You know, we don't depend from a bank or from a private equity fund. This is our company. We are 7 shareholders in the company today, so we can make very fast decisions, and we have a lot of agility. And with this agility, it was easy to send very quick LOIs, to be very reactive, no financing conditions. And the other stuff is that we were also able to regulate our fundraising, which is great stuff. So when the markets become a bit too hot, you limitate a bit more the fundraising in order to keep your return and don't have too much pressure on the investment, which is one of the main problems that have investors since 2016, 2017, with interest rates so low.
And your strategy very much, Philippe, would be to offer your investors a relatively high rate of return, perhaps when looking at some of your competition, and you also would have, I think, a good track record in maintaining your vacancy rates.
Indeed. In the CPI market in France, which is the main competitors we have, the average market is around 4% return, while our returns are more around 6% average. And the secret for that has been that we've always booked indeed assets that are fully occupied with long-term lease on high yield. And the high yield was easy to get, of course, if you are able to visit a lot of different countries and a lot of different asset class. If you focus, for example, only on Paris region or in Germany, or if you focus only in one sector, like logistics today, it's really difficult to obtain high yield. When you're agile, well, you can, when we were buying logistics in 13, 14, 15, all the yields were above 7%. That was quite easy. And now logistics is more around 4%, even lower sometimes, prime logistics. So we are agile. We were still buying logistics, for example, but we bought logistics in secondary locations for investors. So we bought logistics on the Ljubljana airport, just on the airport, really prime, but then with 10-year lease, Kunanagel, great tenant, but then you're buying that for more than 7% because it's Ljubljana and not Paris. Yeah. And same apply with asset classes. We are now buying more maybe retail and hotels, being very careful with the quality of the tenants and the operators. But we consider that if the discount is really there, and that's something that you would have bought for 4 or 5% yesterday, you can buy it today for 6.5, 7 or 7.5, then yeah, that makes more sense than buying very prime asset that everyone wants, like logistics at 3.5 or 4%.
Yeah, so it's really trying to sort of think outside the box a little bit and maybe compromise, as you said earlier on, perhaps on the location or something like that.
If you go on the field where everyone wants to go, geographically or asset class, you will have a lot of pressure, you will have a lot of competition, and you will need to be very, very aggressive on pricing. If you're one of the first one on the market, so on a country or on an asset classes, if you buy the asset class that no one wants right now, well, you have a chance. In the same effect, for example, for us when we went to the UK just after Brexit, no one wanted to go to the UK, and we were very active in the UK because we thought that, you know, what creates the underpricing and the mispriced on assets, sometimes it's more the uncertainty than just the crisis. And those periods of uncertainties are quite interesting for us.
Okay. And at first your funds were euro denominated only, but now multi-currency. What was the reason for that diversification, and how do you kind of manage the currency risk that comes with that?
Yeah, we've always been opportunistic even before we were exposed in currency, and Brexit was really a great opportunity for us when we saw that. We didn't want to do something too complicated. We just saw that the pound took a serious hit with the Brexit, and we thought that combined with the UK market, which used to be around 75 billion a year just before Brexit, and now more around 50 billion, we saw a great combination that could create a lot of value. And I would say that the main stuff that we have at Corum is that we really invest with convictions. So it doesn't prevent you from doing mistakes, but at least you really believe in what you're doing. So the currency, it was exactly that. We really had a strong conviction on the UK market. And then when you start to play like that with the currency, you can do it with other countries. So we start analyzing a lot of countries. Who I recruited what we call a research and development team in my teams that was really dedicated to that. Mm-hmm. And then we identified some other cycles that were interesting, like Norway, like Poland, like Canada recently. And we decided, okay, yeah, let's just reproduce what we've done with the UK with those countries. And it's really easy. It's nothing complicated. We just buy when the money is low and when the real estate is cheap. And when it changed, like for example, it just changed recently in Canada. The Canadian dollar is now a bit higher. For now, we stop, and we'll see what happens in the coming months. But to answer your question completely, for example, we don't hedge, because if you hedge, it means that first of all, it costs you a lot of money, so it destroys part of your performance, and it means that you don't 100% believe in your convictions. So as we do that really with conviction and with security, we don't hedge and we take the risk of the currency.
Okay, we might come back to Canada a bit later because I was quite interested in that when I saw that coming in your bio. I suppose really question of the moment, has the COVID pandemic changed or modified your investment strategy in any way, or are you more cautious or wary of certain sectors or indeed countries?
Not really. If I'm even very pragmatic, I would say that our job, at least on the investment side, is even easier. With the COVID pandemic, because it was really a seller market, and it's a bit less, at least on some asset classes, because for some investors it's more complicated to get financing. But what we did with the COVID was something that we did already in the past before the crisis. We just adapted. So we saw, for example, that the retail was already before COVID struggling a bit because of the e-commerce sector, and that a lot of investors were looking at logistics. So the COVID only accelerated this. But it gave us also some opportunities. A lot of investors were a bit hesitating with offices, but we were still their own offices. There were even less competition on retail, almost no competition on hotels, and pricing got even crazier than logistics. So it just accelerated what we were doing, selling logistics, buying retail and hotels, being very careful on the financials, and still buying offices. And we were already very careful on the covenants of our tenants, so it didn't change a lot on that. What changed?
Exactly, I was going to ask you that question. It probably makes you focus more on the business of the tenant.
Yeah, we've always been, because as we were buying long-term leases, you need to of course check the P&L of your tenant at the date of the acquisition, but you need to make sure that they are going to pay during, I don't know, the 10 years or the 15 years of the lease. And in order to do that, you really need to go deep in the business of your tenant. I can give you an example. We booked the headquarters in Helsinki of a company that is doing e-commerce, and they are really strong in Finland in e-commerce. They have a really good P&L. But the question was, okay, what happens if Amazon comes into that market? And we made a deep study on that with the R&D team, and we said, okay, those guys are still going to work very well because Finnish really wants to buy to those guys. It's a really green company with good values and everything. So yeah, they are going to continue even if Amazon penetrates. But that's all the questions we were already asking that before COVID. And that's also why the COVID was not so much terrible for us. Even, of course, we had discussion with that tenant as every investor, but we knew that most of our investors were financially very strong.
Yeah, I know from my own experience that you very much look and take into account as to why a tenant's in a location, and you like to get satisfied about their reason for being there.
Exactly.
And then just sort of moving on from that, you mentioned it there yourself. During the course of 2020, you've been pretty active in acquiring a number of office buildings throughout Europe. Can we then assume that you're confident about the long-term prospects of the office market and with remote working and all that brings with it?
Yeah, we're very confident with the office market. You know, remote work will work, but the first companies that did remote work, they were the big US companies, tech companies at the end of the 90s. So it was, Yahoo, IBM, Reddit, those kind of companies. They did, I think, complete remote work for 50% of their employees. And after 7 years, they stopped, all of them. Because the HR studies that they were doing, they were showing terrible results. They had a huge loss of creativity because they saw that most of the creativity come from the gestures that you're making during the talks that you have in meetings and everything. The other problem that you have is that it brings a lot of discrepancies between your employee. How can you justify remote work for a 25-year-old employee that lives alone in 25 square meters, for example, in Paris, and someone who is a CEO and has a huge garden and everything? It's complicated. And even if you go deeper than that, the third problem, which is probably the main problem of all the company, if you want to keep talents today in a company, you need to have a strong DNA. They need to really feel that they are part of something. And we really see that with Corum, for example. How do you want your employees to feel to be part of something if they are not even with their colleagues at least a few days a week? So I think, to be honest, that I'm quite optimistic on the future of office. Some remote work will work. Companies will do 1 or 2 days a week, but they will need more space because they will need to create some real collaborative spaces in their office. So I think COVID will actually accelerate something on that, and it will be positive, which is that the office will become more and more a place to meet and to create a real DNA of the companies, plus of course a place of work. So I don't believe in the huge decrease of office market, huge decrease of their values, of the take-up and everything. Of course, some areas will struggle. If you take La Défense in Paris, which is a difficult area because it's really only office, you don't have a lot around, there will struggle. But at the end, office will remain one of the main asset classes for sure. Companies need a place like that.
But do you think that the layout in offices and the way they're used is likely to change?
It will change, but in a good way. I think it will change, but in a good way, with more collaborative space, more space to exchange between different parts of the companies. I think the model of having a very different entities will end, and big companies will go in more consolidated space. Like no more reason now to put IT very far and then the core business in the city center or stuff like that. I think companies will go for bigger offices with like the real model on that, or the big tech companies. If you take the headquarters of Google, for example, or Apple, it's not only an office, it's an experience. And I think most of the companies will go with that. And it's a good thing for office market.
Sure. And I suppose then to really get to sort of, from our viewpoint as brokers, the interesting bit, which markets and countries and sectors attract you now, and for what reasons? I mean, you mentioned Canada, that obviously is a bit left of field outside Europe. So what sort of attracted you to jump across the ocean?
To go to Canada, you mean?
Yes. Or indeed anywhere else.
Yeah. Well, Canada, it was really opportunistic. It's a very concentrated market with big actors. The Canadian dollar was a bit volatile because it depends from the oil pricing. So it drops a bit. So that was interesting. And we went there and we had an opportunity to buy a very good asset on the long term in Quebec, which is improving a lot. So yeah, that was opportunistic. And for now, the Canadian dollar is higher again, but if it changes, we'll go back. That's not a problem. Right now in Europe, if you're talking about Europe, well, France and Germany it's like there was no COVID, it's still very, very expensive. So it's complicated. Some countries have shown more interest because they have been hurt maybe a bit more, like Italy, for example. We've seen a lot of opportunities coming from Italy because there was a bit less competition. Ireland is quite interesting right now, and you might know that because secondary cities are growing very fast, and most of the investors are still very focused on Dublin. But you have quite nice opportunities right now in Galway or Cork, and that's quite interesting. UK is still very interesting because the pound is low, even if it's recovering, and we are not yet, sorry for the word, but in the Singaporean scenario with this UK, which becomes the Singapore of Europe. But the day it becomes that, the price will become very complicated to reach for us. But right now, there's still uncertainty because the financial services were not really agreed during Brexit. So there is still a window for us. And then there's Eastern Europe, which is quite attractive. Poland. Poland is a market with 10 cities that have more than 400,000 inhabitants. It's almost like Germany. The big difference is that Germany is 75 billion of investment a year, when Poland is between 7 and 8 billion a year for investment. So Poland have difficult constraints. It's difficult to invest there. You have a tax ruling to obtain and everything. But the day Poland solves those issues, that will explode. So that's quite an interesting market also.
And then in terms of as we said in the opening, it's basically any asset type apart from residential. And in terms of you like things that are relatively easy to asset manage?
Yeah, we are looking for basically all asset classes that have a commercial lease. Usually, indeed, not too much asset management. Like we're not going to buy like a shopping center, but we can buy until 10 to 15 tenants. And then we can be creative. Like we can buy the standard stuff, 10-year lease, 15-year lease, good tenant, of course. But we are also buying for some of our funds shorter lease, between 3 to 5 years, if we see the potential of the location, if the asset is a bit under rented, and if we consider we have a good chance to renew and create value within the asset. So we can be quite open on this. It's really a case per case study, depending on how the market is going, the quality of the tenant, and the level of rent.
Okay. And I know you work very closely with brokers in the market, and as you say, from a broker's viewpoint, one of the things that's very attractive about Corum is that you're not dependent upon financing. You're an all-equity fund, so that you don't have these layers of financing to concern, which means obviously, as you said, you can move very quickly and very agile. So how can SIOR brokers help you with your investment strategy? And we spoke recently, you talked about investment brokers needing to adapt to investment cycles. What exactly do you mean by that?
Yeah, I think, well, first to come back on what you were saying, I think the first quality of a broker, if he wants to work with us, is to never give up, because sometimes it's quite difficult. We have quite high requirements, so sometimes I receive 5, 6, 7 opportunities where I say no, and the 8th is the good one. The good thing is that when we are involved in a transaction, we execute. 99% of the time, we find solutions, we have the money, we execute. To come back on, the adaptation of the cycles, it's, as I say, we are counter-cycle investment. So today, when you're an agent, if you have a mandate on logistics, for example, well, you're not too. I think you're not too worried. It's normally something that will find a buyer, and you can do a great deal. But we are typically the investor that can look at what most of the investors will not look. I know that it's difficult for agents that were more specialized in retail or in hotel sector right now. Typically, we are the kind of investors that can look at that. So I think when I say that an agent needs to adapt, I think what's really important is to target the right investors for the right stuff. I still have a lot of agents sending me stuff very, very prime, like logistics at 4%. It's great assets, but I cannot do anything. And I think there are a lot of candidates, even French candidates, that would be happy to receive an asset like that, and that will be really competitive in case of tenders. I think we are a very good party to deal with for assets that are not perfectly the targets of the usual investors, that maybe don't need a process, but more an off-market approach. And then I think if they can see that with us and approach us, and you're well placed to say it's not a problem at all for us to be on the buy side, for example, as long as we receive good advice from good agents.
Okay, and by the way, I just encourage all attendees, if you've got questions for Philippe, please put them into the chat or the Q&A, whichever you prefer, because we'd like to have a few questions from members at the end of this session. So I'd encourage you please to ask your questions. So really, so the key things working with brokers, as you say, is for them to keep engaged with you and keep working with you, and I suppose deliver on what they're offering you. Yeah,
exactly. It's really about understanding what we're looking for, and it can take time, because we as I say, we think a bit outside the box, and it's really continue to believe about what can be done. Sometimes some brokers have been surprised. It happens that I received some deal saying, yeah, probably it's not for you because the lease is only 4 years or something, but then I see the value because it's under rented, and I like the location, and then we have a deal at the end, while it was not the one that the broker was saying, okay, this is for Corum. So it's being patient and think that we can see value sometimes when it's not obvious. And that we can go on really secondary location if we believe and if we understand why a tenant needs to be here.
Okay. And so where do you see the investment market going in the future, and what trends do you think might have changed post-COVID, and how is that going to change the markets, do you think?
I like to have crystal ball, I don't, but I think that markets used to overreact. So I think there is an overreaction on the good side for logistics and residential, for example. So I think that pricing now are way too expensive for me, it doesn't make sense today to buy a logistic platform at 3.5%. Just if you go back to basics and the time that it takes to a logistic platform to become not so modern, and all the specification and everything, after 10 years, 15 years, it's really not the same. So if you buy it at 3.5%, you might have risk to lose a bit of money with this. Just speaking about the technical aspects of the building. And in the other side, yes, there is also an overreaction on the hotel and the retail sector that will probably last during 1 or 2 years time for the operators and tenants to get back on their feet, and then those markets would be booming again, at least for good tenants on the retail sectors that are going to survive to that crisis and show their resilience. Same on the hotel markets, when there will be no more discount, no more discussions between tenants and landlords. So I think there is an overreaction that will correct. So the price of the asset class will get closer. Logistics probably will be a bit cheaper, and retail and hotels will be again a bit more expensive, and that would make sense. Of course, the other parameters that will be absolutely important will be the inflation and the evolution of the interest rate. At some point, we need all to accept this. The central banks and the detail banks, they will need to gain more money. We see in Germany right now what's happening right now. When you're a private person in Germany, you can be taxed if you have too much money on the bank accounts. It's the case now for the professional influence. So at some point, it cannot last. So the interest rate will go up. We saw a bit that in the US, even if it has been corrected, and it might be in 2 or 3 years, because we don't want to crash now when we just are getting out by the COVID crisis, but it will happen, and it will be, I hope so, a lot more controlled than what happened in 2008. But we need to be prepared for that, and we need to be very, very careful about the values, because it's always the same. When you're buying assets very expensive at 3%, just a movement of 50 points of basis on the interest rate impacts a lot the values of your assets.
Well, as you say, I mean, it is different this time around, because obviously the 2008 economic crash was very much supported by the huge volumes of debt, and we're just not seeing that this time around. So yeah. I think you're right. It will be
a lot more controlled, and we will benefit from all the compliance rules that are now for all the banks. And yeah, we don't see any more crazy LTVs at 80%, and that's for the best.
Yeah. Indeed, I have to say, my knowledge of French banks were always a bit more conservative on their LTVs, and they came out the other end a lot better than many of the UK and Irish banks.
But Irish banks now are very careful also, I can tell you that.
Very. And as you say, the pandemic has really accelerated certain trends. I mean, a lot of those retailers who, particularly in the UK, but also elsewhere, have gone into liquidation, they were already struggling. It speeded it up.
And if you look at the House of Fraser, Debenhams, and all those brands, they were already struggling a lot even before the crisis.
You probably won't mind me telling this brief story, Philippe, but you probably remember this. I just try to remember what year it was. We were looking at a House of Fraser in the UK together, and it was just before Christmas, and we were just making the decision whether we put the LOI in before Christmas or after Christmas, and then suddenly we got the word that House of Fraser was going into liquidation. That was a lucky escape.
Indeed.
We have a couple of questions in here now from a couple of our members. From Fergus Laird. If you buy in the UK, are you interested in the whole of the UK, for example, or would you look specifically at London and the South?
Yeah, we are looking at everywhere in the UK, absolutely everywhere, even more in the regions actually, because London, of course, I'm looking at London, but London region is more expensive. So we are looking absolutely everywhere in the UK, including Scotland, Wales, and even Northern Ireland. We work in Northern Ireland.
Yeah, and I know you bought there as well.
Yeah.
And then from Tobias in Germany, assuming the property matches your criteria, what about hereditary building rights?
This is not, we are more cash-on-cash investors, so we're looking more at the yield that it brings. But it will be a plus. It's not something that we will value that much, but this is a plus for sure.
Okay, so obviously you're pretty confident about the future, and your investment volumes at the moment per year are averaging about what?
Oh, it will be close to 1 billion, I think. It will be between 800 million and 1 billion for 2021.
So for all the investment brokers out there, loads of opportunity.
Indeed. Indeed. And we divest also quite a lot now because we are going to divest around 200 million euros this year. So the volume of transaction will be close to, let's say, between 1 billion and 1.2 billion.
Okay. Well, that's really quite impressive. A question then from Matthew from Switzerland. Do you invest in Switzerland?
Not yet, but we looked at stuff. I'm not going to learn to something to everyone because everyone knows that, but it's quite expensive and it's a small market, so there's not a lot. So would be happy to come in Switzerland, but for now we didn't find the right assets, but hope so.
Another one coming in here. I have a new 4-star hotel with a 20-year lease.
Why not?
I can't see the rest of that question.
For hotels, what's really important for us is to have the name of the operator. We're buying only the walls, so we need the operator with a lease in place.
Yeah.
So we look at the business plan, and if the operator is a good operator, if it's a good operator and strong, and the good level of warranty is good, and the BP, the business plan is reasonable, then yeah, we can invest in a hotel, and we'll be happy to have a look.
And that again from Matthew was in Switzerland, and obviously if it ticks the boxes, the answer is yes. Just perhaps a point to highlight there that with hotels, you would really require leases rather than management agreements. Would that be fair to say?
We cannot do management agreements. It's a regulation of SCPI, unfortunately.
Okay, and I think we might have another one in here. Yes, this is from Nick McCalvert-Woods in the UK. Yeah, do you see value in data centers and asset class, especially the smaller centers, which are located in non-prime locations, more geared to enterprise data space?
Yes, of course. It's part of the future. It depends on what we say about non-core location. It needs to be, of course, a location with power, which is the most important thing for data centers on the long term. But yeah, if it's a good data center operator and if it makes, it's a bit like classic real estate. If it really makes sense for the operator to be there, we see value. But it's getting a lot more expensive than what we used to see in the past. But I value that for sure.
Yeah, I was going to say that you might struggle to get the yield you require on data centers, the way that market is moving. Okay, well, I think that's kind of everybody's questions answered, unless anybody out there has got any more that they want to ask Philippe. No more questions coming in. Well, then, unless you have anything further to add, Philippe, we might wrap that up then.
No, I think I've told you everything I know almost.
Okay.
But no, I hope I answered your questions and that's more clear for you. But what we are doing and what we hope we ambition to do in the future. It's great for us to have an exposure like that with SIOR also, because it's not so easy to have pan-European events with different agents from different countries. And as you understand, Corum is really today a pan-European, even more than pan-European now, but investor friends, I think now represent less than 7% of our portfolio because it's quite expensive. So we are really active abroad. Okay.
Well, then it just leaves me to say a really big thank you once again, Philippe. And that was a fascinating insight into the markets, and why I thought it was very interesting for you to address our membership was that the fact you are a pan-European and you have the different perspectives on the different markets, which is I think very interesting from our viewpoint. And giving us a window into the world of Corum and the investment markets. So with that, I will thank everyone very much for attending, particularly from those who are coming from the US and from India. Just to say that this is our last event before the summer, but we will be continuing with our Thursday, the third Thursday of the month, our drink receptions. So please do join us for those, because it's a great way for us all to keep in touch over the summer months. And we have our first workshop then will be on the 8th of September. And we are sincerely hoping to have our first live event with everybody in attendance in Dublin on the 24th of September. So please put the 24th of September in your diaries, and hopefully that'll be an opportunity for us all to actually get back together again in real life. And in the meantime, it just really remains me to say thanks to everyone, again to you, Philippe, and have a great summer. Look forward to seeing you, hopefully in Dublin in September.
I hope so. Thank you very much. Thanks.
Thank you very much indeed.
Bye-bye.
Okay, bye-bye.